Welcome back, everyone. Happy Halloween. We're doing some trick-or-treating for some debt because I'm about to close on a home equity loan on my first property. So see you after the closing and I'll tell you all the details. Alrighty folks, so we just closed on the home equity loan at TD Bank. So let's talk a little bit about this home equity loan, why I got it, what I plan to use the funds for, how much it's for, how I qualified for it. So for those of you that have been watching the channel for a while, you would know that I recently got a Heloc, a $55,000 Heloc with PenFed that I closed on in June, and that's on my second investment property. And seeing the potential of unlocking and tapping into your equity for more investment properties, I wanted to go bananas and unlock more equity. So I realized I had a substantial amount of equity in my first investment property, the first one I ever bought in June of last year. And I said, let's unlock some equity with that property. And unfortunately though, PenFed isn't doing HELOCs anymore on investment properties or primaries from what I understand. So unfortunately that was not an option. I had to look for alternatives. So I looked at a couple other credit unions. I didn't qualify for any of them. One of the problems with one of the credit unions was that because I hadn't yet declared the rental income from my two properties, my most recent two properties on my tax returns, because they're under 1 year old and I've held them for less than a year, that income did not qualify, that rental income. So basically those mortgages were seen as debt against my debt to income ratio, and those mortgages are very high. So unfortunately that would not work. I would have to come back to them in a year from now once that income has been declared. That credit union was Signature Credit Union. So if you are an investor and you have investment properties, you may want to check out Signature. They could be a great option for you. So I discovered that TD Bank will actually do a HELOC on an investment property, and they'll take 75% loan to value. So that means 75% of what the property is worth minus your debt on the property. And as long as your credit and your income qualifies and you're able to show documentation and all that's necessary, you can unlock that equity. And TD Bank, from what I understand, is really the only major US bank that can do a HELOC on an investment property, especially in today's climate with these interest rates, is extremely rare, and especially being in New York, it makes it even harder. So I initially tried to do a HELOC with TD Bank. This process started over the summer right after I closed on that HELOC with PenFed. And HELOCs are great, right? You could tap into that equity anytime you want. You only have to apply for it once, and you can usually draw from it from about 10 years, and then usually there's a 20-year repayment period. And you only have to do that application one time, and as long as you don't take out any money, you don't actually have to pay interest on that money, unlike a home equity loan where you have to make payments on it immediately. But they didn't really give me a clear answer. I don't understand if it was my debt to income ratio, or it was that there was not sufficient equity in the home and that they have a minimum amount for HELOCs. I didn't get a very clear answer. It was pretty vague of why I couldn't qualify for that HELOC. So after about 2-3 months of going back and forth and submitting everything that I thought was seemingly required to get this HELOC, I got the phone call that I did not qualify for it, but they should be able to qualify me for a home equity loan. Now that's not necessarily my first choice, right? HELOCs are just far superior, and home equity loans, you'd have to reapply every time that you use up those funds, and there's closing costs associated with it. A HELOC is just much, much better, especially for an investor, much more investment property friendly. But my debt to income ratio and my credit did qualify, and there was sufficient equity in the property to be unlocked. I believe with TD Bank, there is a $25,000 minimum as far as what you can unlock for a home equity loan. So if you did not have at least 25 grand after that 75% LTV, then you cannot qualify for a home equity loan. You're gonna have to wait until you build up more equity. So I said, why not take the money and go through with it? So I went through the process. It was supposed to close September 30th, but especially being self-employed, there was so much documentation additionally required and more back and forth. And believe it or not, how unfortunate, right when we were about to wrap up the process for final approval on the home equity loan, there was actually a major cyber attack in the county that the property is located in, Suffolk County on Long Island, and that attacked everything, the police systems, the title systems, and they were not able to obtain the documentation, the final documents needed for final approval for many weeks, and that just dragged along the process even more. But finally today, October 31st, Halloween, I was able to close on it in person. Last time with PenFed, I had to meet a notary at a Starbucks, and with TD Bank, because they are a major branch, there was one right near me, I could just go in and close on it right then and there. So $27,000 loan amount with closing costs financed and rolled into it. So I opted for that instead of having to pay them out of pocket. That money gets dispersed right away into my checking account with TD Bank, which I had to open because I did not have a TD Bank checking account. That was part of the agreement to get a lower interest rate. So with this loan, there's a 20-year repayment period with no prepayment penalties. So if I wanted to pay it off early, there's no penalties for that. And I got 20 years to pay it off. And so it's amortized over 20 years. And so your payments are actually so low that basically, as long as you could just show some income, right? It doesn't matter if you're self-employed, doesn't matter if you're a W-2 employee. As long as you could show some income, you should be able to qualify for a home equity loan or Heloc for that matter, because it's amortized over so many years. And luckily, TD Bank was able to use the rental income from my other properties to cover those mortgages, as well as count this rent towards this rental property to also offset the debt to income ratio. So I didn't really have a problem qualifying. It was just being self-employed. There was additional documentation I had to show, such as recent business invoices and making sure that my businesses are still in business. So it's much harder if you're self-employed, but you can get the job done. Now, their minimum credit score requirement is somewhat strict. It's 680, which could be quite high, especially for those of you experienced investors who have many mortgages and it's just getting hard. You're tapping out that debt and it's hard to maintain a steady, good credit score. So 680 is quite high. Now, if it's a little bit below that, they may make an exception. No guarantee with the exception. They did make it for me, so that is good news. They were able to use that previous credit report that I initially pulled when I tried to do that Heloc initially over the summer. And then because of that cyber attack that happened in the county, it dragged on so long that my credit report actually expired. They had to re-pull my credit. Luckily, it was still decent and fair, and they were able to let that credit score through and continue with the process. So what do I plan to use this money for? Well, certainly you don't want to put it towards liabilities. You don't want to put it towards a fancy watch, designer clothes, extravagant vacation, right? You want to put it towards more investment properties and build up those assets so that way that new cash flow from that new property could actually start paying down that home equity loan. Now, with a HELOC, you could just repeat that process again and again. With a home equity loan, you have to keep reapplying for that home equity loan, and that's not obviously guaranteed each time, especially as you acquire more properties. They might say that your debt to income ratio is just tapped out and we wouldn't be able to qualify you again. Now, being in an extremely expensive market, being on Long Island, $27,000 is certainly not going to get me that far. I could combine it with the 55 grand HELOC. I'm using a portion of that towards another investment property that's hopefully closing in the next 30 days or so. We'll be sure to post a lot of content regarding that property on this channel, so make sure you are subscribed so that way you don't miss any future updates and have notifications turned on. That will notify you every time we do post a brand new video. I'm also considering doing a BRRR instead of my normal 20% down deals that I've been doing, because with a BRRR, I might be able to unlock all that equity after the newly appraised value with the refi after I rehab the property, and then I might be able to pay off that home equity loan right away with a matter of just months as opposed to years, instead of just doing another 20% down deal that I've been doing all this time. So that's definitely an option, and I might be able to even make a little bit of profit too while I'm at it. And so that 27 grand might actually turn into something more than that. Problem is with a BRRR, especially in this climate, with this economy right now, with these interest rates, they don't really allow for cash flow. For me, it just doesn't make sense to invest all that time, all that money, while I might get it back, all that money being put in, all that time being spent on something that might just cash flow me $100, maybe $200 until ultimately I can refinance again when the interest rates come down and hopefully a year or two from now. So it just doesn't make any sense. It might actually be a liability because yes, it might cash flow on paper, but think about the expenses that might come with that property. You might end up being in the negative, and certainly you don't want negative cash flow. That is not a good deal. So it might make a lot more sense for me to just do another 20% down deal, maybe try to get something below market value if I could, ensure that it cash flows like I've been doing, and then ultimately just wait it out and aggressively pay back that home equity loan as well as whatever I use from that HELOC, and just kind of take the pain and go through it. And for however many months it will take to pay off that home equity loan, basically just live frugally, zero income, and until I can build up that nest egg again and buy another property. That just might be what I have to do at this point. Certainly the 27K does not necessarily have to go towards real estate. It could go towards another venture, but I love real estate and I'm trying to build up as many assets as possible, build that long-term wealth. I'm sure a lot of you might have some other ideas and other options what you would do with that money. So I'm curious, what would you do with that home equity loan? What would you do with $27K right now? Where would you park it? Let me know down below in the comment section. I'm curious to hear your thoughts and opinions. There will certainly be a variation of opinions, I'm sure, in the comment section. More real estate content is to come. We'll certainly update you guys once the newest properties close, and then I'll document what I'm doing after that. So I hope you found this video helpful. Hope you got some value out of it. If you did, make sure you go ahead and smash the like button. I'd appreciate that. Make sure you are subscribed and notifications turned on. Of course, next cash giveaway will be at 20,000 subscribers, which we might hit by the time this video comes out. And if you want to get some free stocks, all mail free, use the links down below in the description of this video. Sign up with the brokerage platforms or Robinhood and or Webull. You'll get some free stocks, some valued to thousands of dollars in some cases. So let us know what stocks you get. And if you want to connect with me on social media, I'm on Instagram, I'm on Facebook, I'm on TikTok. Use the social links down below. I look forward to seeing you guys in the next video. Take care for now.